Welcome back to the final round. The ADP report this morning, giving us a glimpse of what we could expect here ahead of the big jobs report on Friday. 167,000 private sector jobs added in the month of July, well below the forecast of 1.2 million. So for more on this, we want to bring in Lindsey Piegza. She's chief economist at Stifel. And Lindsey, let's start with that weaker than expected report, because I also want to note, though, that there was this massive revision higher for jobs added in the month of June. But what do you think the number for July tells us about where we stand just in terms of the labor market recovery, and then also what to expect on Friday with that big jobs report?
Well, I think there's a lot of uncertainty when we look out to the labor market. If you looked at the range of forecasts for the ADP employment number, it was quite broad. There were some looking for well over 1 million jobs, some looking for a potential even loss to resurge in July. So there's a lot of question marks about what's happening. And in part, this is because there's very clear diverging trends. On the one hand, in July, we know that businesses were eager to get back to work, reopen their place of business, and welcome back customers. But we also saw this painful reality of a rising resurgence of COVID cases, particularly in the southern and western areas of the country. And in some cases, this forced states to not only stall, but reverse their reopening plans. And so, again, with these diverging themes, it remains a big question mark of how this is going to impact hiring on a month-to-month basis, and of course, how it's going to impact this on the broader trend. We did see a disappointing number, well under 200,000 for July in terms of the ADP number, and it's likely that we see this type of trend for Friday's number as well. So positive job creation, but well below that more positive figure of jobs returning that we had seen in the previous couple of months. So we could see somewhere around 200 to 400,000 jobs, which again, nothing to sneeze at. But when we're still talking about 30 million Americans filing for unemployment, there is a large gap of improvement left to be made before we can talk about a labor market that's anywhere near being healthy again.
Yeah, and Lindsey, I wanted to ask you just about the fact that there's so much uncertainty out there, and you talk about the fact that we're seeing the rising resurgence in cases, some states rolling back or stalling their reopening efforts. So when you take that into account, how have you adjusted your growth forecast then for the second half of the year, and even looking further ahead into 2021?
Well, to be honest, we had already factored in a second wave of the virus coming to fruition in the second half of the year. The thesis that this COVID virus was going to be a one-stop shop. We were going to be able to contain it very quickly. And then once the economy reopened, we were going to skyrocket back to pre-pandemic levels. That seemed a little unrealistic to us. And so in our forecast, we had already forecasted or already priced in that second round resurgence. Now, to be fair, we had looked for that to come in the fourth quarter, not the third quarter. But be that as it may, we are looking for growth to return to positive territory in the third quarter, but revert back to negative growth by the end of the year. So what we're seeing is a lot of volatility, more of a W-shaped recovery, if you will, not getting back to pre-pandemic levels, not until 2021, but likely not until 2022 or beyond. So this is going to be a much longer, much bumpier path to recovery, I think well beyond what early estimates had anticipated.
Lindsey, you talked about the bumpy road up to reopening, and a lot of these businesses that did reopen right after the restrictions were lifted have since had to close and are now reassessing whether they can continue to operate as things stand on a permanent basis. And I'm wondering if you think there is a new round of layoffs that's coming. It seems like you get the feeling that there's a lot of businesses right now that are just looking at their balance sheets, trying to reassess where things stand, given how bumpy the path for the virus looks, 5 months, 6 months down the line.
Oh, I think you're exactly right. And I think we're bracing for that second round of layoffs to come. And if we don't see that in July, then certainly we'll start to anticipate that in the August and September numbers. But you're right. A lot of these businesses were able to bridge the gap early on. They had access to PPP funding or other additional leverage from federal or monetary sources. And what we're seeing now is that, again, the expectation was that this pandemic would be very short-lived. We're well into this pandemic, and we have no vaccine, no end in sight. And so a lot of businesses, like you said, are questioning. They're beginning to re-question whether or not they are able to keep their doors open. Now, again, some businesses have been able to reopen, but even at reduced capacity, they're having a very difficult time making ends meet. They're struggling to pay their rents. They're struggling to pay their employees. 50% or 25% capacity isn't leaving much room for a profit base. And so a lot of these businesses that were able to bridge that gap early on are going to be reassessing that now at this stage going into the second half of the year. And unfortunately, I do think that a lot of businesses are going to say, we simply aren't able to remain afloat, and they are going to close their doors permanently, leading to that second or even third wave of layoffs.
Yeah, certainly something we've been talking about here, the possibility of that on Yahoo Finance. So hopefully doesn't come to fruition, but I think the likelihood of it is rising here as we see the number of cases continue to rise across the country. Lindsey Piegza, the chief economist at Stifel, thanks so much for taking the time to join us today.
Thank you for having me.